morning, good evening, everyone. I salute you. It's a good morning that we are here. God has given us another opportunity. There's something that I had promised you, and I want us to look at it. And I said, if you are unable to trade that one, then you need to link again. It is the best shot I can give you to trade, but require you to be, as usual, patient. And if you have been losing money, you have been losing money. One, because you have been trading the market, you have been chasing the market in the opposite direction. You usually know that the market move in pushes, and then they form the peak. So you only supposed to trade, and I kindly maybe discourage trading every day. You're only supposed to trade once you have identified the peak formation. And to identify peak formation, if you can be able to see at least 3 pushes, unless the market is resetting. But this market is trading to your direction, you should be able to see those 3 pushes, because after every 3 push, the market will reset. Okay, market will reset, and then maybe form another peak formation low, and then continue up. So let me not waste much of your time. I want to give you prices and short and clear, so that you can be able to know whatever I'm talking about. Now, one, when you are trading, you need to identify the peak. What is most important is for you to identify the peak. You need to see a push, and an information low. And when you are trading now, okay, it's working on time frame, but for you to be able to be consistent and not panic at least, and get at least some dollars from the market, it's good to work with H1 time frame. I would recommend this, and then H4 time frame. But even in 15, depending on where the market is, still the market can this one work clearly, even in 5 minutes. But these are the best time frame. But if you know what you are doing, you can even get it from 5-15 minutes. But you see why maybe this one I will not recommend us to use that one. Okay, we have the peak formation as I have said. Peak formation low, the market will be push, another push, from peak formation low. So you are supposed now to wait the market to break the H1 or H4. Make sure that the market break the nadir or this over here, and then at least there is a candle that crosses below. When it is H1, there must be a candle to cross below this level here. There must be a candle, and then you are supposed to wait for your MA50, where your MA50 is, and wait for the market to go back to that particular area. In this format, then we give it the name Id50, hence the name Id50. This is our MA50. This is where the MA50 is. Then as the MA50 moves down, the MA50 maybe was somewhere here, then like that, it will be somewhere here. Look at the alignment. For you to trade, the market must cross below this one, and after crossing below this level here. Okay, sorry for the interruption. Now, as I was saying, maybe I'll go back a bit. After this candle has closed below this area here, then you, whether it is one candle or 2 candle, doesn't matter, as long as there is a candle that has closed below here. Now this structure has been broken because there is a candle, but I'm not saying a week. There must be a candle crossing below this one, this nadir here, crossing beyond this area here. Now then you wait for the market to go back to where we have the MA50 and bounce there. At what time frame you should see a pattern like M, then you wait the market to drop. The first area to monitor is where we have MA, EMA 200, where we have EMA 200, that will be the first area. The EMA 200 may be somewhere here. There, that is the area now where you're supposed to target, the first target, because definitely if this market comes and maybe the first time you can get there and then bounce, then if it does not bounce this particular area and happen to go through the EMA 200, then it is likely to come back and retest EMA 200. Why? EMA 200 in H1, it is EMA 50 in H4, and we are talking about ID EMA 50. So the market will go through, come back, and then bounce there, and then continue to complete the third level. So this is where we are supposed to look for an entry in H1. This is where we are supposed to look an entry in H1 up to where we have EMA 200. In the case the EMA 200 then is broken, then we wait for the bounce now to enter again and complete that cycle, and then again the EMA 50 again will be somewhere here. So the market will come and make nadir there. When it breaks this particular nadir here, then you wait for retest, then rejection, then you buy. Thank you very much. But before I complete, or I cancel, or I finish, let us go and look at the chart and see what we have in the chart, and we see whether that one have been obeyed. Let's go to 1 hour time frame. 1 hour time frame. This is gold. Now this is my this is my EMA 200. This one here, EMA 200. This one is EMA 50 here. So this was where we have a peak low. This was our peak low. After peak low in H1, the market broke the structure. This one, let me try to maximize it so that it can be a bit clear here, because this is the lowest point that I can see where the peak was. There was a peak reset. Even if you start from this still area, the same applies. The market broke the nadir here, came back and it tested the EMA 50 in H1. It tested EMA 50 in H1. Here, this is where we have the nadir. Market went, came back to retest EMA 50 around this area. Although it did not come back to this particular area here, but this was retest, then the market went up. But finally, it came and touched properly. Even if you did not get an entry at this particular area here, and if there was no entry at this particular area here, you could have waited. Maybe you missed this one here. You could have waited for the market to come back and then retest EMA 50 this particular area over there. You could have entered there. So this is where we have a clear touch of EMA 50. Then what happened after that? Let's see. Could have traded from here all the way up to this particular level here. So this is from this is around from 2438 up to 2530. 2530. Could have traded that one. Let us look for another part in H1. Then we have another peak here. This peak low here. Peak low. Then the market broke the structure, came back, although it went below, but formed a pattern there. Again, if there was no clear rejection here, you could have waited. The market again went up and broke the nadir. This one here, this was the nadir. There were some candles that closed above in H1. In fact, you could have an R entry at this particular level here, where there was a rejection. Then the market went up, came back, but not go beyond this area. So if you never entered here, you could have entered at this particular level here. Then the market again went up, bounce again. Then if your that entry was around this area here, you could have traded up to that is from let's say 2501 up to where we have 2630. That's a very good and very nice move. Now you can see now the market came to EMA 200 in H1. Why? This is EMA 200 in H1, because now if you go to H4 the same applies. Now the EMA 200 in H1 is EMA 50 in H4. So if you go to H4, it is 4 hours. If you are trading 4 hours, you could have waited for the same thing and you could have got the same entry. The market broke the structure of this particular area. Having said that, then this particular area here, this is EMA 50, but we are in a H4 time frame. So now this was another entry now in H4. And set side, once the market has broken the structure, this was the structure in H4 here, has taken the market structure, it broke the market structure around there. If I can delete everything here, this is where the market broke the structure. Then the market went and came in H4 where we have the EMA 50. This is where you are supposed to look for rejection, and there are very clear rejection if you look, and even reversal candle, this one here. Then you are supposed to get into the market right away from here, then to where we have now. And I'm expecting now this market to make still another move upward because of the pathology of 3, that is 1, another 1. So I'm expecting this market to come to about there, and then another 1 before the market now decrease. This is what I'm expecting. So let's go to back to H1 and see where we have what we have and where we are now. So in H1 is what we have here in the chart. As I have said, we are waiting the market to come to this particular area here. What do we have? This is our EMA 50 here. This is our EMA 50 here. Market broke the structure, and there are several candles that closed below the structure. So I was waiting the market to go back to where we have the EMA 50 in H1. Then on Monday market open, I shall look for a bounce here, rejection here, pattern here, before the market go down, and then we form a pattern here before to continue going up like that. So what I'm actually expecting is something like this. Market may come down on Monday, then after that form a pattern, then it will come and try consolidation this area. Then this EMA 50 shall be now around somewhere here. We have this consolidation. The market can even have a sell hunt after this consolidation or something like that. Consolidation around this area. Then on Tuesday or Wednesday, the market shall start the other move to complete this 84 cycles. Thank you very much. If you have a question, you can address it in my Telegram. Have a nice time and God